Welcome back. You're listening to Get Real, and I'm your host, Bob Gallagher. Joining me in studio today is Eric Shabshelowitz, commercial broker with Cabot and Company in Boston. Welcome to the show, Eric.
Thanks for having me, Bob.
So, Eric, we invited you here today because you specialize in investment properties. So, A lot of your clients are instead of living in the properties, they buy property either to rent out or to develop in other ways. So, a lot of our listeners right now, if they're interested in investing, they're probably thinking, where should I invest? So what's your advice as a commercial broker in Boston? Where should people be focusing on investing their money in real estate?
Yeah, what's interesting about Boston is there's opportunities throughout the city that fit every investor's appetite.
Mm-hmm.
So I work with investors that are looking for premium buildings in the Back Bay, Beacon Hill, South End. The returns there in terms of rents aren't going to be as high as in some other areas, but investors like those because over the long term they've done so well. On the flip side, if someone's looking for great cash flow, they're looking at buildings in Cambridge, Somerville, Jamaica Plain, Quincy that offer returns that are great, and they're a lot higher than they would get in the bank and savings accounts, and it's some great opportunities.
Okay. So when you talk about returns, just for those audience members listening that aren't sure what you're referencing there, you're talking about the rent roll in comparison to how much you're spending on the building, basically?
Right. The easiest metric for investors to understand is it's called net operating income over the purchase price. So it's called the capitalization rate, or what we call the cap rate. So what you want to understand is, what are you taking away? So you're collecting the rent, but you're also paying taxes. You're also paying insurance. So at the end of the day, what are you taking away from the building relative to what you purchase a property for?
Right.
So in Back Bay and Beacon Hill, cap rates are close to 4% on average for multifamilies, versus in Quincy, Jamaica Plain, you might be getting closer to 6%.
Okay.
That's the goal. The higher the cap rate, the better.
Right. So you're going to make more money if you get a little further away from downtown.
Exactly.
Because you're not paying the premium to be in downtown.
Yep, exactly.
So let's talk about the kind of properties that you're seeing investors buy right now. And let's use downtown for an example. I mean, you said that when we started today, you were talking about the range anywhere from under $1 million to all the way up to $15 million. What are you seeing sell for the most part right now?
Sure. Yep. Like you said, Bob, I work primarily in the $15 million to under $1 million range. So most of the transactions I handle are multifamily properties, and they range from 2 units up to, we'll say, around 15 units in downtown Boston. And the different markets have different layouts. If you look at a building, a multifamily in South Boston, it looks very different than a building in the Back Bay, or a building on Beacon Hill, or a building in Jamaica Plain. So it's different configurations based on different neighborhood.
And what is it? Triple deckers versus side-by-side duplexes, or that sort of thing?
South Boston has a lot of triple deckers. Back Bay has more 6 to 8 unit buildings, depending on how they've been carved up. But lots of different asset types, I'd say.
Okay.
Cambridge has a lot of 2 families. Same with Somerville. That might have been designed more for a family of 4-bedroom on the first 2 floors, and then maybe a small unit up top, or vice versa.
Now, prices on multifamilies in Cambridge, those are kind of crazy now too, aren't they?
They are, yeah. We've seen the prices go way up in Cambridge, and Somerville's following behind. I think the percent return in Somerville the last few years has certainly trumped Cambridge, just because Cambridge is already seen as a great destination. But with everything that's happened in Somerville, there's been a lot of interest in that market as well.
And I don't want to put you on the spot now, but can you give us an idea on the average price for a 2-family in Cambridge? Is it crazy?
I would say it's around probably $600 per square foot.
Oh, wow.
In Back Bay, it's around $900 to $1,000 per square foot for a multifamily. South Boston's closer to $400 per square foot. We'll say maybe $450. Jamaica Plain's a little under $400. Quincy, you can find deals $200 to $300 per square foot.
Wow. So Quincy sounds like the bargain.
Quincy is the bargain. Rents aren't as high, but there is a lot of activity in Quincy. Just the proximity of the Red Line and being able to be downtown Boston very quickly, it's very attractive to investors.
Isn't there some big development going on in downtown Quincy right now? I know it's been on the drawing board for, decades. Have they actually started it?
It is in progress, yes. That was the filings basement of Quincy. They had a big hole in the ground and construction that started and stopped, and the developer ran out of money. But that is in progress again.
And that's sort of that live, work, play model, right? The mixed-use development?
Exactly. Just like we saw in the Seaport District, a lot of communities are trying to follow suit. Burlington with the district. You've got Quincy Center doing that type of development. It's what a lot of people are trying to follow.
Oh, I hadn't heard that Burlington was going down the road with that too.
Oh yeah, Burlington's seen a lot of development. Lynn's another market that's seen a lot of development. That's transit-oriented growth. That's got a mix of housing, retail. We'll say 24/7 entertainment.
And Lynn is really interesting because I went to school on the North Shore for years, and back in the 90s, Lynn wasn't a place that you wanted to go, but with the escalation in prices pretty much everywhere, all of a sudden Lynn looks like a huge bargain, doesn't it?
It does, absolutely.
Now, I also heard rumors, they weren't rumors, I've seen in the papers that they're talking about redeveloping that whole tract of land that GE used to own right on the ocean. Have they started that yet? I haven't seen anything on it lately.
I haven't seen anything either. To be quite honest, I handle mostly south of Boston, so Boston and below.
Gotcha.
Yeah.
So going back to the South Boston area, so I'm guessing if you're just starting out in investing in real estate, chances are you probably don't have $15 million to put into it. Would you kind of direct those first-time investors toward areas more like Quincy and the South Boston area?
Certainly. I tend to find most real estate investors start either with a partner or two because of the down payment, or they start with a residential condo just to get their feet wet. It's easier to manage a condo because there's an association that's looking out for the roof and the big building systems, so it's relatively easy. But in terms of a starter multifamily, absolutely, Quincy's a great market to look at. Jamaica Plain's a great market to look at. Medford's even a great market. And with the recent announcement that the MBTA Green Line extension project officially, as of yesterday, is delayed, there's going to be, I think, more opportunities in those markets because there's going to be more of a question of will that Green Line extension actually happen?
Right. So if you're willing to take a gamble, it could pay off big down the road.
Yes.
Yeah. And that's really what it comes down to if you're going to invest in real estate, right? It's what's going to happen over the long term. I mean, you're probably not going to make money if you're buying to hold for a few years, I'm guessing.
Well, and it depends. We've seen tremendous appreciation in markets like Somerville. I don't want to say prices have doubled, but certainly on some streets in Somerville, we did see prices double.
Really?
So it's not out of the question. But most real estate investors, you're right, it's not the short term. If you're looking at multifamilies, unless you're doing a development, you're looking much further down the road. And as we talked about briefly, it's dependent on the type of investment you're looking for. An investor that's going to purchase in Back Bay, Beacon Hill, South End, they have a different strategy for their investment than most of the investors that are looking at Somerville, Jamaica Plain, Quincy. I'd say it's very long buy and hold investors in those premium Boston markets like Back Bay, that the returns aren't going to be as high. The net operating income, the cap rate that we talked about is very different than the investor that might be looking at the other properties for cash flow.
So it's all about price appreciation if you're going to buy downtown.
Right. Or the way a lot of my clients view it is we'll call it investment safety. Back Bay, Beacon Hill, South End, they've been seen for a very long time as premium neighborhoods. You probably hear a lot about East Boston being one of the big emerging neighborhoods, as with Dorchester. But traditionally, I'll say the mantra of those neighborhoods among local investors hasn't been great. So there's a little bit of a hesitation for some of those investors to get into those markets. They just don't view those markets as safe as some of these downtown neighborhoods.
Because they're more like emerging markets. They used to have I don't want to say a bad connotation, but Dorchester, again, that was another place that you would never have imagined people snapping up properties left and right and turning them into condos.
Exactly.
But it seems like price-wise, you're running out of places to do it, so you're kind of pushing out a little further every time, right?
Yeah, and I heard an interesting insight at an event earlier this month that we're seeing a lot of national and international investors come into the Boston market, and they're buying assets in neighborhoods and locations that a lot of local developers and investors overlooked because they were traditionally seen as bad. You look at the hotel development that's going on north of Boston, and you think, why would anyone want to develop in a market like that? And wouldn't you want to be downtown Boston? Granted, the casino is a whole separate issue, but you've got these international and national investors that are looking at Boston and the surrounding areas very differently than what we've traditionally looked at it. They look, it sounds like, a lot more proximity to downtown than necessarily what does a neighborhood look like right now.
Right, because if you're going to buy and hold over the long term, the neighborhood's probably going to look a lot different in 30 years.
Exactly.
Yeah. And going back to looking at prices, at the time, in the late 90s when I was doing business in Somerville, you could buy a multifamily for $250,000, but everybody thought you were nuts to buy a multifamily for $200,000 to $250,000 in Somerville.
Right.
Now those same people aren't saying you're nuts.
Well, and I hear it. I've heard it a number of times. People that bought buildings on Newbury Street 20 or 30 years ago for $200,000, $300,000. Friends and family called them crazy.
Yeah.
What are you doing buying a building for that much? Now those families are selling the properties for $8, $10, $12 million a piece. So
wow.
It's tough to know what the future will hold.
Yeah. Because looking at it today, you can't imagine, buying a building on Newbury Street for $8 million and 30 years from now selling it for $80 million.
Exactly.
I mean, it just boggles the mind even thinking how you would get there.
Right.
But I'm sure when somebody paid $200,000 for it, they never saw $8 million either.
That's exactly right.
Yeah. So it really does come down to a buy and hold strategy. Yeah.
Yep.
So why don't we talk a little bit about 1031 exchanges?
Certainly. So for those that might not be familiar, 1031 exchange is a very powerful tool for real estate investors. If you sell an investment property and you are going to make a profit, the government's going to want a piece of that through capital gains tax.
They want a piece of everything, don't they?
We'll keep this to a real estate discussion, not a political one.
Yeah.
But a 1031 deferred tax exchange lets the real estate investor defer that payment of capital gains tax and roll all the proceeds of the sale into a replacement property, or in some cases multiple replacement properties. So what real estate investors are able to do is move money from one property that maybe they've held for a long time, difficult to manage. Maybe they roll it into a new property that's a lot easier to manage. And they don't have to pay the capital gains tax, so they never get hit with that bump between the basis of the old property and the new property.
Right.
And
so it allows your money to grow faster because you're not giving it up to taxes.
Right. And the mantra is morbid as it might be, is defer, and then die. Because when you pass and the property passes to your beneficiaries or heirs, they enjoy the step-in basis.
Yeah. And the taxes are their problem, not yours anymore.
Exactly. And who knows what the administration will be, whether there will be an estate tax.
Yeah.
It remains to be seen.
Yeah. So, which makes planning tough. But again, somebody else's problem after you kick the bucket, right?
Right.
Why don't we talk a little bit about how competitive the market is for investment properties? Yeah, because for people looking to buy to live in them, it's been brutal. Everywhere from Boston all the way out to practically the Worcester market. What about the competition if you're looking at investment property, multifamilies?
Certainly. The most competitive situation I've been a part of so far is there was a two-family in Medford that a client was interested in. We made an offer that was a very strong offer. I'll say I don't believe there were any conditions. We were either at or very close to the asking price. The problem was there were 41 other offers, and we weren't talking about a trophy property in Newbury Street that maybe there was big international interest from. This was just, I'll say, a run-of-the-mill two-family in Medford. It's very competitive.
42 offers?
42 offers.
I can't even imagine. How many people showed up to see the house?
The open house was just like an open house party. It was just constantly people in and out. But I'm also starting to see, I'll call it buyer fatigue. after you've made so many offers and lost, because there were 42 offers, only one of them actually got the property. Unfortunately, it wasn't my client. Buyers are getting frustrated spending that much time analyzing deals, figuring out what a fair offer would be. That a lot of times clients might say, well, let's wait a few weeks. Let's see what happens. If it's still on the market, then I'll focus on it. So buyers should be using that to their advantage. I've had at least one situation so far where a client in one of those call for offer scenarios made an offer. It was below, I'll say well below the asking price, and we were only one of either we were the only offer or there was only one other offer. It was never fully made clear, but we got the property for a lot less than we anticipated, and I think what the seller likely reasonably would have expected. But again, I see that as because so many groups are just frustrated with spending a lot of time on deals that they never end up winning.
Right. It's one thing if you're competing against one or two or even three other buyers. Whole different ballgame if you're competing against 40 people. I mean, that's madness.
Right.
I mean, your odds of ever winning go down drastically in that scenario. We're actually about to run out of time, Eric. I want to thank you for joining us on the show today. And anybody that's looking to invest in real estate in Boston or anywhere around Boston, you definitely should give Eric a call at 617-894-2138. Again, it's Eric Shabshelowitz. Cell is 617-894-2138. Thanks for joining us.
Thanks a lot for having me, Bob.
That's all for this edition of Get Real. Join us again next weekend for more.